What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, it's all about Pier 1. That's right, we're talking Pier 1, ticker PIR. Now, studio up in Chicago is down for the week, so we've switched up styles, and we're going to be doing it this way with the screen grab. Now, we did it last week. Everybody seemed to like it, so we're going to go ahead and do it again this week. Why the heck not, okay? So, when people ask me, Dave, why did we do Pier 1? This is the reason why. Because I took a look at the previous several quarters of action on Pier 1, and I saw last quarter the thing went up 31%. The quarter before it was up 7, negative 1.7, negative 0.58, negative 17 pretty much, negative 14, and I could go back in the past too, and you just see that it moves. So that's why, and that's what the whole point of this is anyway, is we're in here trying to find something that moves so we can shoot it, right? So we can make a couple of bucks. Now, I'm going to have my handy dandy little chat window here over on the right. Now, there is a little bit of a delay, of course. So when I say hi to you guys or whatever, because I see Trevor, I see Danny, you guys are in here, a little bit of a delay. So if you throw a question in there, I don't respond right away. That's why. But you guys already know the drill. So this is going to be the first of a few events we're going to do this week. I sent out the email earlier that tomorrow we're going to do JP Morgan. And on Thursday morning, then I'm going to do that morning after kind of live Q&A session like we did last week. I think that was cool, except this time I'm not going to just do it for the premium folks. This will be a premium feature moving forward, but I just kind of want everybody to be able to see it. So I'm just going to open it up this week, in the spirit of the shortened holiday weekend. Why not? And we're going to do that on Thursday morning. Then, as always, we'll have the good, the bad, and the ugly review on Thursday. And also, we're going to do Netflix because Netflix is going to report after the market opens next Monday. So I want to make sure that everybody is rip-roaring and ready to rock on that. Okay? So I'm obviously multitasking here. You guys can see my toolbar. I got all sorts of stuff going on. So if you hear me scream, it's probably gold's fault because I'm keeping an eye on gold while this is all happening. It's up at 1275 right now, screaming higher. I'd like to step all over it. So anywho, let's go ahead and dig into Pier 1 here a little bit on Zax.com. As always, we kick things off with the price consensus and EPS surprise chart here, and it's been kind of ugly. No doubt about it. Lots of negativity here for Pier 1. 2013, shares kind of peaked out up at 25.20. That's when you still had some growth in the EPS estimates. Not just year-over-year growth, but, accelerating higher, right? Accelerating higher. And now things are starting to come down, creep on down, been creeping on down for a while through 2013, 2014, 2015, down into 2016. But something's happened here. It does appear that these have troughed a little bit. Now, remember, we made a few bucks on Restoration Hardware in sort of the same way. And I suppose Pier 1 is, right there with Restoration Hardware, right? As far as doing home furnishings and things of that nature. Of course, a little different company, right? Or at least Gary Friedman will like you believe that it's a much different sort of company. And yes, Pier 1 does differ a little bit because they actual have, they have their retail locations. Restoration Hardware is building those big retail locations though, so that's why. But yeah, definitely more retail here on Pier 1. And there's a turn, right? There's been a change in the weather, and the stock has gone from 410, right, up to, what are we at, 721? So not a dramatic shift by any stretch of the imagination, but things are starting to tick in the right direction. Okay, so that's good. Now, what else has happened recently for Pier 1? Now, I was digging through some research reports here, and I did finally announce a new CEO, Al Sapir James, 46 years old, from Kmart. Huh? Kmart? I know what you guys are thinking. It's the same thing that I was thinking, because you know me. I'm like king of the Sears haters, right? Not going to lie. So when I saw that it was the guy that was running Kmart into the ground, I was a little bit concerned, right? However, he didn't really run Kmart into the ground, right? Kmart was already pretty much in the ground before he took the helm. He tried his best to kind of, turn that thing around and pump some life into it. So he came in and did the CPR on Kmart. And the board at Pier 1 saw what he did with Kmart, trying to turn things around, and said, you know what, we're kind of in a similar space too. And they are. They are going to close, I think they closed 50 stores this year. They're probably going to close another 50 over the course of the next couple years. They're getting leaner. They're getting more efficient. They've tried to boost up the efficiency in their supply chain, things like that. So this is exactly what you want to see out of a company that's turning the corner, right? And the other thing you do want to see is these estimates. So they've always kind of promised growth in the estimates, which is understandable. But since November of last year, there's actually been an uptick here on both ends. The current, not just the current year numbers, but also in next year's numbers. So this could be a real turnaround for shares of Pier 1. And you do see sort of the big ramp up right before last quarter's earnings. And then it's come down a little bit, right? So the expectations maybe kind of reeled it in a little bit. The company did raise guidance on March 6th for both EPS and revenues. And those are the big things I saw. Let me use my secret Zacks charts. I love busting out the secret Zacks charts for you guys, because this gives me the historical Zacks rank, right? So I like this because it's like an extension of that price consensus and EPS surprise chart that we have. You could sort of tell what that Zacks rank is in there, but you don't really see it. Here you see it. So now you see a lot of negativity, throughout 2015 as the shares came down. Lots of negativity even in 2016. And then it changed, right? Midway through 2016, things changed. Now we're on, Zacks rank number ones, and then Zacks rank number 2 buy, then a number 1 buy, and then now, it's basically just a function of how long ago people were bullish on the stock. That's why it's a number 3. But let's go in more specifics here on the detailed estimates page on Zacks.com. So it is a number 3, but it does have a value style score of A, growth style score of A, momentum of F, for a VGM composite score of A. They're going to report after the market closes tomorrow, so you got the rest of the trading day today and tomorrow's session to decide if it's something that you want to mess around with. Valuation 15 times earnings, decent. That's why you've got value style score of A. And the growth. Where are we looking for the growth? Bottom 24% of our Zacks industry rank. Let's look at the growth. The growth is not on the revenue side. Negative 2% revenue growth for the current quarter. Next year, 1.25. This is what I like to see, right? They're not lying to us. They're not going, next year? Oh, next year is going to be great. We're going to knock it out. No. 0.84% revenue growth is what they're forecasting for next year. So they're not lying to us, okay? They're keeping their expectations low. Now, here's where it seems rather optimistic, is in the EPS growth. So this is all kind of encompassed in that they want to be more efficient. They want to cut some of the fat. They're cutting down the stores. They're leaner and meaner kind of thing. That's the plan here. Current quarter EPS growth 44% almost. Now, mind you, this is on updated company guidance, right? They raised their guidance on March 6th. So we had a few analysts who came out and increased their report or their EPS estimate. Next quarter looks like 78% growth. Current year, -7. Next year, 11. So they're going to become more efficient. ROI is going to get better. And margins should improve. And now we're looking over the last 60 days, 7 analysts have come out and increased their earnings estimates for the current quarter. 8 have done so for the current year, 3 for next year. But over the last 30 days, there's only been one person increasing for the current quarter, one for the current year. Okay, so that's kind of why this is a 3. But in the realm of 3s, I would say this is on the higher end of 3s. So it's pretty much a Zach's rank number 2. Like, it should be there. The magnitude, we've seen our consensus estimates go from 30 cents up to 33 cents for the current quarter. Next quarter numbers from negative a penny to negative 2. Current year from 39 cents up to 42. Next year from 45 to 47. One important part that's just jumping out at me here is they are making money, okay? So it's not like a turnaround story that has to happen, with great magnitude. Otherwise, these guys are going to go bankrupt. It's much more muted than that. It's like we're turning the corner. Things are going to get better. We're all going to start making money again. And that's kind of their plan here, okay? And if you look at the most recent surprise, a 10-cent surprise last quarter, coming in at 22 cents versus expectations for 12. Quarter before that came in at negative 5 cents versus negative 6. You're going to brag that you lost a penny less money. It was the flip side the quarter before. So that's kind of what we're looking at here. Okay? All right. Let's look at the stock chart while I've got this up. And as always, guys, I like to use my free stockcharts.com because everybody can check it out, right? And everybody can use it, and you don't need my fancy schmancy Ninja Trader software and data packages and all that kind of stuff, right? All right. So stock rallied up from $4 all the way to $9.68. Look at that. $9.68 into late December. And then they just couldn't sustain it. They got the bulls got a little shy. I bet if we go from the lows to the high, a little bit of support at the 50% fib, down at 675-ish. Then a little resistance up here. So this is kind of the trap right now, is these 740s to the 675s, okay? And the market's kind of sandwiching it in between that. All right. And of course, gold is still going higher because the market hates me today. Okay, so that's what we're looking at for Pier 1. Really the 50-day moving average, horizontal slope, just kind of going sideways right here. What are you going to do with that? That's telling you we're still in a range-bound market, right? So range-bound there. Then overbought stochastic rather, but it's not, I don't know, it's not that dramatically overbought, is it? 117, given what this market has been doing, what this what Pier 1 has been doing, just kind of bouncing around there, not dramatic. Had a little bounce at the zero line at the bottom end of this trend. So this is about as ho-hum as it gets, folks. Really just kind of net neutral on this. And volume has been uninspiring, really. What's this average volume here? 2.2 million shares, 2.5 million shares, a couple million shares. That's really nothing when you're talking about a stock that's trading at $7, right? So put that into nominal terms, and you just see kind of how insignificant the trade has been here on shares of Pier 1 recently. Okay, so nothing all that exciting there. So let's take a look at the options chain. As always, pull up the side-by-side view so we can get an idea of what the at-the-money call, at-the-money put are trading at. Where's my pen? There's my pen. And $7. So we'll look at the $7 call, $7 put. Do our math that way. Get back to my calculator. All right, so $7 call trading 65 cents, $7 put at 40 cents. You're talking 105 divided by 7. They're looking for a 15% move. Really? Really? They're looking for a 15% move here in shares of Pier 1. Would not have thought that, right? Just looking at that, would not have thought, even though, yes, it had a big move last time, pricing in 15% is pretty surprising to me, okay? So this may present a couple of opportunities on either side of this. So let's scroll up a little bit. So yeah, 721. Change from the side-by-side to the stacked view. This way we get puts on one side of this and calls on the other. Or on the top, rather, and then the other one on the bottom. Okay. So, you know, if the market's already pricing in 15%, so they're expecting a pretty serious move here. Where was that, the top end of this little channel here? Yeah, just like 750s. So they're expecting a little bit more. I think they're talking here, right? And then on the bottom end, 670. This might be right on. This might be the bottom here for this stock, is this sort of 675 level. Just below 7. Okay. Let's get back here onto the chart and see. So what does a call spread look like if we went with a long call spread on these guys? And I'm not saying I'm going to do that. I just want to do the math here real quick, okay? While I've got this up. All right, so $7 call, 63. If you went long the 7 and went short the 8, minus that 20, it's going to cost you 43 cents right now. Okay? Now, the cool part about that 43 cents is that a chunk of that, 21 cents of that, is essentially intrinsic value, right? Because that call is already 21 cents in the money. So that's pretty cool. So on this trade, let me just price this whole thing out. So 43 cents. So that means you got the potential to make 57 cents on 43 cents, or 132% on a long call spread here on Pier 1. And shares of Pier 1 would have to be at or above $80 per share, or I'm sorry, $8 per share, not 80, $8. They would have to move about 80 cents to $8 in order to make that money, okay? Surprisingly, that doesn't feel all that bad. So I think for a bullish trade here, going long the 7-8 call spread for a 43-cent net debit looks like an idea. So the bullish trade, and I'm going to type this in here because this way I don't forget it, is long the April 21st 7-8 call spread for 43-cent net debit. Okay? I think that's good. Okay. Now if you're bearish though, you're in a little bit of a pickle because it's not as easy on the bearish end. If you looked at this and you said, okay, well, I'll just do the 7 and the 6. Well, that $7 call, or the $7 put rather, that you'd be long on this is already 21 cents or 3% out of the money. So do you want to go long on a put spread that's already 3% out of the money in the hopes that it's going to come roaring back, roaring down that quick? I don't know. I wouldn't be comfortable with that if I was bearish. I think if I was bearish, I would just be doing almost the opposite of this bullish trade. Or selling the 8-9s rather is much safer and more boring. Bears, prepare to be bored. Because what if you sold this 8-10 as a bear? If you sold the 8-10 call spread as a bear, come on, bar chart. Of course, bar chart's going to reload us here, right? Let's go back. Just so they can mess up my drawing here. So on bar chart, if we're selling this 8-9, 23 cents is what you're going to get in for selling the $8 call, and then 10 cents is what you're going to have to pay to buy that $9 call. So in this case, you've got 87 cents at risk to make 13 cents. So that's 15% is what you'd be able to get on that trade. Now that doesn't sound all that fantastic, right? But we got to put it in some perspective. One, you're only talking, 2 weeks after expiration? And two, go back to this chart. Here's $8. $8 is all the way up there. So the bulls are really betting on something aggressively happening to the upside. While being a bear, you could just say, well, yeah, it's got to go down from 8, right? Don't forget this was a $4 stock not too long ago. So if this turnaround story doesn't go fantastic, then the 8s aren't going to get taken out, right? So I think the bear trade is more cautious. And it's selling the 8-9 call spread for 13-cent net credit. Okay, I think that's I think that those are the two plays here, because you can't. It's just because going with this long put spread here on the bearish side isn't going to work. I mean, it's just going to look terrible. You could do the 8-7, and it's going to look, and you'll be long. It's going to cost you $103 for the $8 put, and then if you sell the $7 put, you're going to get back 43 cents of that. So in this case, you're going to have 60 cents at risk, okay? But your put is already 80 cents in the money, pretty much. Your long put is already 80 cents in the money, right? But your upside potential is only going to be 40 cents on the 80, or 40 cents on the 60, so it's only 66%. So I'll still put this in as a more aggressive bearish trade, and that's long the 8-7 put spread for a 60-cent net debit. Okay? So those are kind of the two, well, three. Now I guess I'm giving you 3 trades that I'm looking at. It just depends on what side of the aisle you're going to pick. Do you want to be bullish heading into this report, which just happened, or do you want to be bearish heading into this report, right? So anyway, so in the case of Pier 1, personally, do I think you should be bullish or you should be bearish heading into this report? Even though I gave you a bunch of bearish ideas, I still think I have to go with the bullish end of this. And the reason is, back to this kind of surprise sheet that I had before, 31% last time, 7% the time before, and in the past it's gone down 14, 15, 16%, right? So it has a tendency to move on earnings. So I think it will move on this earnings. And if you look at this gap up last time, the stock went from 6.48 to 9 that day, right? That's a huge jump. So the bottom end of this range, just above, sort of just under 8, right? I think if it breaks into that, then now you're talking way up. You're talking almost $10 could be the top side of that range, okay? So the thing can really move. Yes, lotto tickets, let's discuss. So if I am in fact very bullish on here, I think you just buy the 8s and just hope that it breaks out. But what's the difference between buying the 8 and buying the 7 in this case? So where do you really cash in buying the 8 versus buying the 7? Because if you buy the 8 and this goes to 9, then your 8's going to be worth $1, so times 4, and your 7's going to be worth $2, so times 3, essentially, right? So anything past 8, past 9 really is where it really gets exciting for Pier 1. And just look at the chart. It's had a huge spike up before on earnings. I think it can happen again. So if I'm looking lotto, long, April 21st, $8 call, 23 cent net debit. All right, that's what I'm looking at here for Pier 1. Now, I know this isn't, not everybody wanted me to talk about Pier 1, and it wasn't the most exciting thing in the world, but just what did it for me is looking at this consolidated surprise chart sheet that I have, the earnings surprises, and seeing these big surprises happening on earnings, even when on the revenue side, not much of a move. So the revenues came in line, but it was the EPS that really made the magic happen, where the surprise was. So I think it could happen again. Lightning could strike twice in the same place. All right, so that's all I have for you today here with Zach's Live Trader. Remember, action-packed week, a lot going on. Tomorrow, we're going to have the JP Morgan review. And again, I think I put that at 10 a.m. Central, so a little different time than we normally do. Wednesdays are pretty jam-packed for me, so I wanted to get in the morning, but not first thing in the morning. So there's that. And then Thursday, please, if you can, come on and hang out for that morning session that we're going to have. We had a really good morning session last time. A lot of people participated. So if you could do that, that would be fantastic. And again, I'm looking for suggestions for next week's rounds of shows. As always, livetrader@zax.com. If you could shoot those over to me, and we will go from there. So thanks so much for hanging out with me here today on Zax Live Trader, and I will see you all tomorrow. Have a good one.